Okay, sound check. 1, 2, 3. Hello, Kenya. Okay. Just waiting for the stream, doing a quick sound check. Okay, sound seems to be a bit low. Okay. Let me know if the sound's coming through okay and at a good volume. If so, then we'll get started. Welcome everyone to another week of trading, and obviously there's a lot to cover today. So before we begin, just a quick general advice and risk warning disclaimer. Note that any advice given here is deemed to be of general advice, as information or advice given does not take into account your particular objectives, financial situations, or needs. Therefore, at all times you should consider the appropriateness of the advice before you act further. Sounds good? Okay, good. CFDs and Forex are leveraged products, thus carry a high level of risk and are not suitable for everyone. You can lose more than your initial deposit, so you should ensure CFD and Forex trading meets your investment objectives. Strategies and charts used in this presentation are, for example, only. Your reminder that past performance is not indicative of future performance. Okay, just quick session guidelines, and I definitely need to do this every week. All questions have to be in English. Just be mindful of everyone that this is an English session. Session will be conducted in English. Do not spam. Okay, no matter what it is, just don't spam. Respect one another and be respectful, and please ask relevant questions around trading. Okay, so for those that are new that just joined in, and if you're wondering what's going on, this is a session pretty much. You can ask anything about trading. You can ask about strategies that are being used. If you have any questions about trading, feel free to jump in and ask your questions. You can also request for me to have a look at whatever you're trading, and I'll just go through the list one by one. So first come, first serve, and basically that's how it goes. Okay. There's a lot to cover today, and I think if you guys watched the outlook this week and last week, I did put out a few warning that we're looking for a stronger US dollar. I think that's already it's already kicking in. We got Bernard yesterday, commenting about how they're going to go off the balance sheet really quickly, and that's what we want to look at the FOMC meeting minutes. By the way, it's meeting minutes. It's actually the meeting minutes of the previous meeting, so don't get it confused. We're not going to be looking at an interest rate hike or anything today when the FOMC meeting minutes get released. What we are looking for is hints for what they're going to be doing in the May meeting, actually. So yeah, that's basically what it is. We're basically looking for hints for the May meeting, how they're gonna work out the whole reducing the balance sheet for the Feds. How they're gonna reduce the balance sheet? Are they gonna do it aggressively in terms of rate hikes next month? We're looking at hints. Is it gonna be 50 basis points? Is it gonna be 25 basis points? Those are the kind of stuff that we are gonna be looking for, and I think the market has been trying to price in that hawkishness that we see from Bernard yesterday. Just a quick warning, it's gonna be today. It's afternoon for you. It'll definitely be afternoon for you wherever you are, or evening for you, or even past midnight for some of us, right? But basically, we got the FOMC meeting minutes, and that is dropping in about 6 hours time. So you basically have a 6-hour window for whatever you want to do today, and that's what we're here for. So we are going to jump straight into Euro USD. Okay, let's just recap on what we were actually looking for last week. If you watched last week's webinar, we were actually looking for a little bit of Class A bearish divergence. That was around 1.1125. We saw price move back down below 1.1125, and that will be the trigger point for further weakness in the Euro USD. And we have seen that. I've outlined support at 1.0975 and 1.0950 pretty much since about 2 weeks ago. So yeah, If you missed out, every Monday we release a market outlook for the week, and that's basically where you want to get your key levels and what kind of technicals we're looking for, what kind of fundamentals we need to keep a tab on, and that's on Monday. So yeah, anyway, so we have seen price move back down below 1.1125. We broke below support 1.0975 and 1.0950, so we're looking at that 25 pips range. And I'll zoom out a little bit, so don't worry about the chart, it's going to get small. But if you're wondering why I'm keeping a tap on 1.0950 and 1.0975, it actually goes way back to early March, right? At the start of the Ukraine-Russia war, whatever. That's basically the support and resistance area is basically a tug of war, if you want to say, around that 1.0950 to 1.0975. So we're looking at about 25 pips range. Around that area, and that will be your intraday key levels or resistance area. If it does break above 1.0975 on the hourly time frame, it will close above the Ichimoku cloud. Now, if you're new and you're wondering how do we look at the Ichimoku cloud, it's pretty simple. If price is above the Ichimoku cloud, then we're looking for more of a tendency to the upside. If it does break below the Ichimoku cloud, then we're looking for more potential downward pressure. If it's inside the Ichimoku cloud, then it's likely going to be flat or sideways. Okay, so keep an eye out on 1.0950 or 1.0975. For Euro USD, we're going to be waiting for this one. It's a different scenario for Pound USD. That one is a little bit more on the go right now. But for Euro USD, expect, that area, we broke 1.0950, but we haven't come back to retest 1.0950. Well, at least Euro USD haven't. So we're going to be looking for that area as a key resistance for your intraday trading. If you're going long, you want to be watching out for an exit around 1.0950 or 1.0975 should there be a lack of momentum. If you're planning to go in a trade, then wait it out. Wait until price get close to 1.0950, 1.0975. It gets rejected, then you want to double confirm. You want to confirm it again with the whatever. You can use stochastics, you can use RSI, or you can use moving averages. That's completely fine. Just wait for the momentum to turn around before you jump in for a short. Okay, it could be that price is not able to go back to 1.0950, 1.0975. If the momentum turns around before price gets there, it's completely okay, because overall we are in a downtrend. It's just ideal that we are looking at that support that was broken. It hasn't been retested as a resistance, so keep an eye out on those on the Euro USD. Now I'm going to go through the questions. If you guys have any requests or any questions, then please do type it in. Okay, all right, good afternoon. Hello Kenya, hello Indonesia. I know some of you are from Indonesia. What's my opinion about the current dollar strength? Do you think market overpricing or overestimating the Fed hawkishness? It's actually more on underestimating. It's not really overestimating. Look, we haven't seen a strong dollar movement, like a really strong dollar movement that should be in line with what the FOMC is going to do. We got the whole Ukraine-Russia thing that was just putting it on hold. But yeah, dollar could potentially get stronger. I think we talked about the whole 2-year yield and 10-year yield on the outlook on Monday. If the 2-year yield is higher than the 10-year yield, and if it maintains that consistency for a period of 2 months, right? We're looking for a potential sign of recession. Right now, the 10-year yield is actually above that dollar index. Is actually it actually pushed higher. We're going to take a look at dollar index in a minute. But yeah, I think the overall market is actually underestimating what the FOMC's hawkishness is all about. All right, Aussie USD. We'll take a look at Aussie USD. Euro yen, sterling yen will follow all yen pair or no. I want to put a note here. I want to avoid euro yen, sterling yen, or pretty much accept dollar yen. I've taken a look at those yen crosses pretty much the whole day. I think what we're looking at is last week we've got yen weakness. This week we've got dollar strength. I think yen is actually going to get sidelined this week. So we'll take a look at those. What I'm looking for right now is more of a retracement on the hourly time frame on the Euro USD, retracement to the upside. So I'm expecting a little bit of a potential maximum pullback towards 1.0950, 1.0975. I would be looking for a short today if you haven't had a position yet, but some of us do have a short on the euro. If you do have a short on the euro, you want to have your stop loss maybe around 1.1. All right, 1.10. That would be behind the last swing high, but for now, for today, we do expect a little bit of a resistance to come in 1.0950, 1.0975. Get rejected there, then that would be your highest probability on an entry for the day. I mean, I think the whole market is expecting more of a hawkish comments coming out from the FOMC. Now, it's not just the FOMC meeting minutes. I've taken a look at the schedule. If there are, let me just double check. We got Kashkari, we got Bernard. What else do we have? We got Kashkari and Bernard yesterday. That's completely fine. FOMC meeting minutes today, and then we've got Bullet, Evans, Bostic, Williams. Now these are voting members. You need to keep an eye out on what they're saying, but they will be talking a lot, and they'll all have different views on how the FOMC stance is going to be. But again, I think they are going to be more aggressive. They are likely going to be more aggressive, so keep an eye out on that one. I think all four of them are going to be hawkish. FOMC today or yesterday, it's actually today, this afternoon, tonight, midnight, past midnight, depending on where you are from. It will be in the next it'll come out in 6 hours time. Yeah, about 6 hours time. Can you please remove drawing from the chart? It's looking too messy. Please make it easy to understand. Yeah, I would love to remove it, but if I start removing it, then we're gonna have a problem because I need those lines for my outlook. Hello, Nigeria. Gold in buy zone. No, I'm actually looking for more of a bearish stance in gold. Okay. The chart more like down direction. Yes, that's the whole thing with Euro USD. I think we are looking for more of a bearish scenario for Euro USD, but I don't think it's time to jump in yet. It's too early. If price does move back towards 1.0950, 1.0975, then if it gets rejected, then that would be where I'm looking for more of an optimal entry. But yeah, I mean, if you already have a short position, then you can have your stop losses to about 1.10. That would be it. Don't put it any higher than that at this point in time. Carries a lot of risk with the whole FOMC stuff. All right. In whereby we put sell position in your USD, I can't do something because okay. Let me go slow. Okay, I'll zoom in. I'll take it slow. If I'm going too fast, just say it. All right, don't feel bad about it. I know I speak fast. I'm trying to go slower. It's just that we used to have a lot of stuff to cover in an hour or an hour and a half. So yeah, okay. Euro USD. Here's what I'm looking at. Right, I'm expecting this. This is the most optimum scenario, right? That would be that's the best way to go, because we are looking for a correction right now, and those corrections are going to be limited at 1.0950 and up to 1.0975, so about 25 pips range. The second thing that you want to look out for is if the stochastics or RSI starts going down. That's what you want to be keeping an eye out for. But there could be a lot of scenarios, right? I mean, we could have price getting rejected at 1.0925, then we could potentially go lower, but ideally this is where I want it to be. I want it to be in this range, and I'm happy with 1.0950. Okay, my stop losses will be, above this swing high. You'll note that there's a swing there. That would put it close to 1.0990, okay, which is close to 1.10, which if you're not familiar, I like to put it where the psychological price level is, and that's basically where I want my stop loss to be. In terms of targets, we do have a lot to aim for. We could actually aim for 1.0850. We could put it at 1.0880. So it doesn't matter. I mean, in terms of risk to reward ratio, we are looking at a good ratio here. If price does pull back to the upside, at least in the next 2-3 hours or so, right? Overall, I'm looking for more of a continuation to the downside. So if you're looking for a short, and I prefer to look for a short, I don't like to go long right now, and I'll tell you why. If you do plan to go long, you're going to be limited at 1.0950. Your stop losses are going to be at this low. Risk to reward ratio is actually double the risk and half the reward. So I don't like to look for a long, but if you already have a long position, then as I said, you could be aiming for 1.0950, 1.0975. That could be, you know, your trade, right? I mean, if you're trading on a 15-minute time frame, 5-minute time frame, yeah, I mean, go for it. I think there's still room for it to go towards 1.0950, 1.0975, but I would prefer to not go against the trend. Therefore, I'm looking for a short in Euro USD. Okay, no problem, Mike. Anytime. Okay, Aussie USD, Aussie Yen. Might want to be careful with Aussies, but yeah. Bearish divergence on the pair dollar Canadian. We'll take a look at that in a minute, but all clear on Euro USD, and I'm gonna jump in on Pound USD next. Okay, Pound USD. We know that the key levels are actually around 1.32, 1.31, and 1.30. Okay, now. There are not a lot of drawings. If you're wondering what are those drawings, those are Ichimoku Kinko Hill, and that's how I look at the market. I mean, you can ask about Ichimoku Kinko Hill, but yeah, I mean, if I close it up, I'm going blind. That's not how I look at the market. But yeah, I can't please everyone, but I'll try my best to give you, you know, what my take is on the market. Okay, for Pound USD. I'm actually waiting for just one thing. I'm waiting for the momentum to turn around. In terms of correction on the hourly time frame, I think we are good. We're about 50%. In terms of how far it can go, it might go to about 61.8%. But at this point in time, I am looking at one scenario. Okay, if it crosses above the Ichimoku cloud, because it's actually pretty thin. In the next few hours, I would actually stop trading the pound, because then it'll just go back into the range. But right now, if it stays below 1.31 and the stochastics or RSI starts pointing down, that's what I want to be waiting for tonight for Pound USD. Okay, so same scenario with the whole Euro USD thing. I think we are looking at potential dollar strength to continue. I think the whole FOMC's hawkishness is not really well priced in by the market, and that's possibly because of the whole Ukraine-Russia situation. But right now, you want to keep an eye out on 1.31. So I'll have two scenarios for you. If it's unable to close above 1.31, then I want to continue looking for a short as long as the stochastics crosses down. The other scenario is actually a little bit clearer. Okay, if price is unable to go above 1.31 and it does closes below 1.3075, or where the red line that you see here, that's the Tenkan Sen. So if price does close below it, this is on the hourly time frame, by the way. So I work on the hourly time frame and the daily. So that's how I look at the market. And I'm actually waiting for a trade opportunity on the Pound USD. If you're planning to go short, then you can have your stop loss at this swing high if there's no new high. Okay, in terms of target, we could actually be targeting 1.3. Now, 1.3 is actually the daily 127.2%. And that is actually still intact. We could use that as a target, and there are actually room to go to the downside on the daily. Okay, so let me go back to the hourly. You can initially target this low here. That would give you about 1-to-1 risk reward ratio. You can target 1.3025, okay, or you can go straight for 1.3. Now this is not a lot for pound USD. This is actually pretty small. We are trading within a range right now for pound USD. It's actually not trending. It hasn't been trending for a while. It's actually a range bound between 1.3 to 1.32. We got 1.31 as a pivot. Right now we are actually below that pivot. I'm actually waiting for the stochastics or RSI to point to the downside, and I'm going to be looking for an entry. I've got one set at 1.3075, so if there's an hourly close below 1.3075, I actually want to go short on pound USD, and in terms of risk to reward ratio, I think we are good to aim for 1.30. Okay, I'm not going to be aiming for more because I know 1.30 is a psychological number. It's also a strong support for pound USD, and it actually lines up with 127.2% Fibonacci extension on the daily. Okay, so yeah, I think it's a good small trade for pound USD, not too much of a risk, good returns, and this is what I'm going to be waiting for tonight. Next up is actually gold. As I said, I'll go through. We'll go to dollar Canadian later on, but I want to talk about gold because a lot of you are looking at gold. Let me zoom out a little bit. We actually look at gold last week, and there were two scenarios, right? One to go long, one to go short. That was still within the range. We're still capped by 1950. We're still pivoting around 1920, and we are looking at support about 1900. So I'm clearing that off right now. This is actually last week's chart as well in here. This is on the other time frame, and it's actually flat, right? If we consider how hawkish the FOMC is going to be, then yeah, we are looking at a potential push lower towards 1900. And that would be the likable scenario if there is an hourly close below 1920 today, right? Tonight. So, what's my take on gold? Fundamentally, because of the whole hawkishness with the FOMC, then we're likely going to be seeing dollar strengthen. Then we're going to be looking at the gold spot to actually drop. There are concerns if the sanctions in Russia get worse, right, from the Western countries to Russia. If it actually gets worse, then people are talking about a potential bounce in gold and stuff like that. It's all speculative. I'm looking at what we are right now, where we are right now, and I'm keeping an eye out on 1920. Now, if it does close below 1920 tonight, then the momentum actually points to the downside. We might have room to go towards 1900. So here is a scenario for gold. I am actually looking for a close below 1920. If it does happen, stochastics crosses over, then you could be looking for a move towards 1900. And your stop losses, you don't have to put it at 1950. You can actually put it at the swing here about 1935. Okay, so about 1918, 1919, 1919. I'm happy with 1919, 1835. Profit level is about 1900. And sorry, oops, 1900. Yep. And stop loss is about 1935. So that's your plausible scenario for gold. Just a note, I don't actually trade gold, and gold's actually not my favorite commodity. I prefer trading oil, but you want to have your focus not on oil today. You want to have your focus on gold. Okay. Anything for FOMC, gold is good, and right now, if it does close about 1935 and it doesn't trigger our trade on this one, then I prefer to step aside because overall it's actually within a range, and I'm not really confident that gold has the momentum to actually break above 1950. Okay, so that's my outlook on gold. Yeah. Can I see it? Gold area. This is what I'm looking at. So focus on three levels: 1920, 1900, and your resistance 1950. We are about 1925 right now, 1930. Keep an eye out on this one. Let me go through the questions. Is there any session for oil? And what's the difference between from XCI USD and XBR USD, and which one is oil? Both of them are oil. XCI USD is actually NYMEX, is US oil. XBR is actually Brent crude oil. It's actually UK oil, right? It's just different exchanges, but they're oil. They're one and the same. So yeah, normally we just call the NYMEX one WTI. That's the XTI. XBR is actually UK crude oil, or London crude oil, or Brent crude oil. That's basically just a different exchange, but they're both oils. In terms of prices, they might be different, but in terms of movement, they're actually very similar. Okay, so yeah, a lot of requests for dollar Canadian, so we'll take a look at dollar Canadian. Okay, let me clear off a few stuff, and I'm actually gonna clear it off. Just make it simple, that without any drawings, this is my chart as it is, right? I can get rid of the grids if that helps. Maybe it'll be a little bit clean, but this is how I trade, right? I mean, we can get rid of the stochastics or whatever not, but I'm not getting rid of the Ichimoku Kinko here. Okay. So, dollar Canadian, what should we be looking at? What should we be looking at for dollar Canadian? Right now, it has actually transitioned above the Ichimoku cloud. Okay, that's one thing to note. It is actually attempting to correct itself, but it is actually considered to be above the Ichimoku cloud. It's just right now it's within the Ichimoku cloud, so it's a correctional phase that we want to stay away from, at least on the hourly time frame. Now, if you go into the daily, right, it is actually starting to flat out. And we actually have 1.2450, I believe. We don't actually have a daily close below 1.2450, and that is your key level for dollar Canadian. Now, what's happening here with dollar Canadian, and why I was looking at a potential for dollar strength to kick in, was we're actually waiting for it since last week. We didn't see that happen, right? So the stochastics, if you're wondering why I'm having all these stochastics and whatnot, because I think momentum is important, and I need to know what the overbought condition or the oversold condition. Now, we are actually coming off the 20 level, so we are about to call the dollar Canadian as oversold, and it's not going to happen until both of the lines actually go above 20. All right, we already have the fast one going above 20. If the slow one goes above 20, then it will be oversold. So while we're looking at an oversold market at a psychological price level, then we're looking for a potential bounce on the dollar Canadian, right? Now, overall, let me just explain this a little bit, because if you look at it and you'll say, but you just say that if price is below the Ichimoku cloud, then it's going to be bearish and whatnot. Yeah. But everything that goes down needs to correct itself before it can actually be pressured lower. So, dollar Canadian on the daily time scale, we are actually looking for a pretty huge correction. I mean, this is going to be the swing. We're looking at a correction potentially towards 1.27. That is on the daily. Talking about it from this level, we are actually looking at about 200 pips to the upside. Now, that's for dollar Canadian. As for dollar Canadian, this is actually a good range. All right, it's not huge for pound USD, but what with dollar Canadian, this is actually a good range. Okay, so that's on the daily. I'll keep 1.2450, but I want to go into the hourly time frame, because on the hourly time frame, you're actually looking at this short-term correction. Okay. We got 38.2 and 50%, and that will be still within the Ichimoku cloud. And if you have a dollar Canadian position, if you have a short position and price doesn't close back down below 1.2450 today, that is a key level that we're looking at on the daily time frame, right? If it doesn't close below 1.2450 today, then we could actually see a potential bounce from 1.2450. That bounce might come in a little bit higher, maybe around 50%, 38.2% here. We're looking at this range here, but I'm expecting a bounce to happen on dollar Canadian. Just like how we're waiting for a short position in Euro USD and a Pound USD, I'm actually looking for a potential buy on the dollar Canadian. Now I'm looking at a potential dollar strength, therefore I much prefer to go long on dollar, and that would be the scenario. Right now the stochastic is already coming down fast, but price is not. And if it does bounces off, as long as it doesn't close below 1.2450, I'm actually going to be looking for a potential long position with my stop losses down here. In terms of target, we are going to be looking at, the daily target, or maybe you can use the hourly highs as your target. That's still going to give you a good high risk reward ratio. Or you can aim for 1.26, 1.2550. It's up to you. I mean, in terms of target, there's actually a lot of targets for dollar Canadian, right? Let's be fair and we'll put it at 1.2550. This would be the scenario that I'm going to be waiting for today for dollar Canadian, right? And with one condition as well, in terms of the momentum, it does crosses back up. Okay, so dollar Canadian, that's sorted. How many of you are actually long dollar Canadian, or how many of you are actually short dollar Canadian? So if I can see a vote, because I think there were a few questions on dollar Canadian. There are no indicators that's gonna give you a buy and sell without wrong calls. Okay, there's no such thing as 100% accurate trading strategy. We can tweak around with the probabilities, but again, at the end of the day, if you have good risk management, anything with small probability is still great if you have really good money management. All right, dollar Canadian, euro Canadian. Okay, Mike, you've got a question for oil. Which one is better that you suggest to trade for oil, XTI or XBR? XTI has smaller volatility compared to XBR. I think XBR moves a little bit more than XTI. So in terms of what do you prefer, I prefer XTI. In terms of my sizing, I actually have a little bit more on the XTI than the XBR. Just because it's more of a controllable volatility. XBR is a little bit more volatile. It does move faster. Moving average setting, I don't use moving average. This is actually Ichimoku Kinko Hyo. It basically comes with those built in. You got your conversion line on the Tenkan Sen, you've got the Kijun line, the baseline, I got the Chico, the lagging span, which I don't use. You got the Senko A, Senko B, that's gonna give you this, the cloud, right? I'm actually not using moving average. It does look like moving average, but it's not moving average. All right, Euro CAD, Euro USD. We talk about Euro USD. So dollar CAD, everything good with dollar Canadian. Then we'll move on to Euro Canadian. Okay, so let me frame it a little bit. Again, I'm actually looking for more of a downside continuation for Euro Canadian. We can clear off that resistance trend line, support trend line. I'm gonna keep 1.43. I'm actually gonna draw a new one at 1.41, I believe, but 1.4125 actually. Yeah. Okay. I'll keep 1.43. It doesn't matter. It's not gonna change anything. Right. Just to note, if you're wondering on the momentum side, this actually dips below 20. And that could potentially drive the trend quicker. So yeah, a little bit more on the cautious side. I'm actually not really bullish on euro. All right. So what we have here is actually it's actually a hidden bearish divergence, right? We have a strong push to the downside. Market's correcting itself slightly to the upside. Where's my channels? There we go. All right. So what does this look like to you? This actually looks like a flag as long as it doesn't exceed 20 periods, but let's just double check. Okay, this is more of an ascending channel, but it's still a continuation pattern. Because this is going to be more than 20 bars, so it's not going to be considered a flag, but keep this channel for Euro Canadian. Right now you actually want to see a break below 1.36, so if you're looking for a position in Euro Canadian, it's likely going to be different. You can take it here right now, but your stop losses is going to be about here. Okay. In terms of target, you could be aiming for 1.3550, but to be safe, to be a little bit more certain, then I actually want to have my entry lower, around 1.36, right? And that way we can have a smaller stop loss around there. Okay, so we got two. The one here, that's right now if you want to jump in, or you can go for the second one. That's gonna give you a little bit of a smaller risk reward ratio, but you're risking about 50 pips. The other one you're risking about 70 pips, for about 92 pips gain. I prefer the second scenario, but the choice is yours. There are two entries. Either you go in short right now, or you wait for a close below 1.36, and I prefer a close below 1.36 on the Euro Canadian. I don't want to go long Euro Canadian. If you take a look at how thick the Ishimoku cloud is, there's going to be a lot of resistance for Euro Canadian. Look, I'll be honest with you. I mean, if I turn off all the indicators, right, you can clearly see this is a strong downtrend. You don't really want to go against the trend, and that's basically what it is on Euro Canadian. All right, let's talk about Aussie USD and Aussie Yen, and we'll take a look at Euro Pound. I'll be a little bit more cautious with Aussie USD. Some of you get the memo yesterday. There was a little bit of a change in terms of how the RBA is reacting. A lot of lines here. I'm actually gonna wipe it off. So yeah, to clear off the lines, I'm actually gonna clear it off because we don't need all these lines at this point in time. I'm good with 74, and we don't need 75, 74.50. Nope. Yep. We can clear it off right now because we actually have a new cap, and that would be at 76. This is on the daily, by the way. I'm just framing it. So yeah, that's someone just asked me to clear off everything. Yeah, I'm clearing off everything. Have a look at this one. And now compared to the Ishimoku cloud, this is actually way above the Ishimoku cloud. So if there's any push to the downside, any correction, we are looking at support coming at about 74. That's the worst case scenario. Okay, now in terms of momentum, this is about to become overbought. I think I put a note on the outlook on Monday. We are looking at a potential overbought condition for the Aussies, right? It could be Aussie USD, Aussie Yen, but more on the Aussie USD. We are about to go into an overbought. If price is unable to close above 76, today's what, Wednesday? Yeah, pretty much if this week doesn't close above 76, then we actually have an overbought condition for the Aussie USD. Now, in terms of the hourly, is it going to correct itself? Is it going to go up again? Right now, you need to focus yourself on this low here. Actually, not that low, but around 75.50. Okay, so if there's a close below 75.50, it will trigger a few things. One, it will take price below the Ichimoku cloud. It will also switch the momentum back to the downside, and obviously that's not a good sign. It will transition below the Ishimoku cloud, and we are looking for a correction lower, potentially towards, it's actually going to be a huge correction, guys. Let me just draw it for you. From here to here, look at that. 75.50 is around 61.8%. If it transitions below that level, then you want to close your swing longs on the Aussie USD. Be a little bit more careful if you're holding long on the Aussie USD. If it closes below 75.50 today, we could transition lower. In terms of how far you can go with Aussie USD, we could see a return towards 74. Okay, 74 cents is there. 74.25 is around 127.2%. There's actually going to be a huge correction. At least on the hourly time frame, it could happen. Okay, if it does close below 75.50, then you could have your short position like this, initially having this stop loss. But we are looking at around 74.25 as your potential target. Once price progress below that 75.25 level, then you can have your stop loss to this high there. If there's no new high, that will be your estimated stop loss. It's actually huge for an intraday trade. So you are looking at initial stop loss of about 120 and 120 target, and potentially lowering your stop loss to about 50. Okay, but that's Aussie USD. So keep an eye out on Aussie USD. I don't think Aussie USD is ideal, because if you're shorting Aussie USD, you're actually going against the trend. It's unlike Euro USD and Pound USD. You actually have a bad probability if you want to go short Aussie USD. But again, whatever goes up needs to come back down. Whatever comes down needs to go back up, and that's just how technical goes. It's just the market correcting itself. And we're here looking at the correction happening right now. So yeah, if you have a swing positions on Aussie USD, you want to be careful. I don't know when it's going to happen. I seriously do not know when it's going to happen. But we are actually looking at a potentially overbought condition. And if you're missing it, there's actually something in here. It's actually a butterfly. So yeah, be careful with Aussie USD. I don't want to maintain my long. If you have a long position on Aussie USD, you should be out with 76 as a target. I was actually aiming for 75.50. I wasn't even aiming for 76 on the Aussie USD. So don't overstay your trades in Aussie USD. Aussie Japanese yen. Let me clear this off. All right, make it clear. We're still capped by 94. Aussie USD is gonna, Aussie yen is likely gonna be different from Aussie USD. We actually dipped down below oversold, so we should be categorized as an oversold condition. But here's the thing: if dollar strengthens, and it strengthens so much so that it actually pushes the yen, it could actually trigger a close above 94 yen on the Aussie Japanese yen. So as I said, I want to actually step aside from yen pairs. I want to step aside from Euro yen, sterling yen, Aussie yen, except for dollar yen. If you're okay with dollar yen, then stay in dollar yen. But Aussie yen, Euro yen, sterling yen, be careful, because they're, you know, the dollar counterpart is actually not looking strong enough. Okay, so it could be very choppy for yen pairs. It's going to be very unpredictable. But here's the thing: watch out for 94 yen. If it doesn't close above 94 yen, just be a little bit more cautious. If you take a look at the hourly time frame, it's actually being capped by 94. It's attempting to break above 94, but it's unable to do so. Again, it's not timed for a short yet, because I don't see any indication for a short, at least not from the Ishimoku. But I want to be cautious of 94. Okay, so if you want to minimize it, you want to trade it intraday. If you go into the 15-minute time frame, you can actually use this range to trade the Aussie yen. Right? You're not going to see it from the hourly time frame, but if I zoom in into the 15-minute time frame, you are actually going to see that it's actually pretty much in a range bound market condition, waiting for a breakout. It could break below 93.50 and pushes lower towards 93.25 and 93, and that's enough. It's actually huge, right? So if it does break below this range, then we could be looking at this trade scenario where it could potentially push towards 93, potentially even lower towards 92.75. But choice is yours if you want to target this. I don't trade on the 50-minute time frame, so if you are looking at this just clueless and waiting for a trade idea to jump on, I'm not that kind of guy, right? I don't give you trade ideas without telling you the risk involved in it. I'm gonna tell you the risk. If you're not familiar with this, do not jump in on the yen pairs. So if you're not comfortable with yen pairs or you're not experienced enough to handle yen pairs, I would stay away from Aussie yen, Euro yen, Sterling yen. Dollar yen is okay, but the other yen crosses, stay clear if you're not sure what you're doing. Okay, I don't like using the 50-minute time frame, but if you take a look at the opportunity on the Aussie yen, then yeah, you could be aiming for 93, 92.75, but let me just remind you the risk to reward ratio is actually not that great, because your initial target 93 is going to give you a risk to reward ratio that's actually you're risking 65 pips for about 50 pips gains. If it's worth it for you, then go ahead. All right, but at this point in time, it's a little bit risky. Okay, it's there. It's on a 50-minute time frame. If you want to trade, short term, go ahead. We already talked about Euro USD, so if you can recap that on Euro USD. But I'll recap everything before we finish up. Dollar Canadian, we just actually talked about Dollar Canadian. We already got the levels. Again, we're gonna recap that soon. Euro USD is still rising, so it means we can sell now. Just wait for the momentum. Actually, we'll touch on the Euro USD in a minute. So yeah, a lot of people are asking about Euro USD, blah blah blah. When the stock goes up again to pick pace in, okay, is on Amazon. Okay, I'm lost, but can you rephrase that? Is it good to place fully auto EA? I'm not one to do full EAs. I like to know stuff that I'm looking at. I do automate my trades, but not all of them. So yeah. There are pros and cons, okay? Okay, for Euro USD, and you just jump in, let me just review. On the Euro USD, we're actually looking for a pullback towards 1.0950, potentially towards 1.0975. Sorry, 1 hour time frame. Here we go. Right, this is the scenario that we're looking at. We want to see market goes up, 1.0950, 1.0975, gets rejected. That's my cue. That's what I'm looking for tonight on the Euro USD. I'm actually looking for a continuation to the downside, but I think there's still room for price to move. Right now, I'm just waiting for price to find, just let price do whatever it wants to do, correct itself, 1.0950, 1.0975, leave it alone. Once it gets exhausted, that's when you want to jump in for a short. Now, if you're using fibs and you're curious what those levels are, it's actually around 61.8, 78.6% for an intraday correction. Okay, but we're keeping the chart simple. Right now, that's where you are going to be looking for in terms of pullbacks, right? We call this a pullback. I actually want price to pull back towards 1.0950, 1.0975, because the higher it goes, the smaller my stop loss is going to be. But yeah, those are the area that's about 25 pips range, and that's what you're going to be waiting for in terms of Euro USD. And then Dollar Canadian, we actually had a look at Dollar Canadian. I want to see price maintain a position above 1.2450. I don't think it's actually going to go all the way down to 1.2450. I'll be honest with you. I think we're looking at a scenario where it actually bounces off from this box here. So if you're looking for a long, you could be looking at about 1.2460, 1.2470 on Dollar Canadian. But the opposite of Euro USD, I'm actually looking for a long on Dollar Canadian. Kind of simple scenario here. Not time to jump in yet. The overall momentum hasn't changed to the upside yet. I'll be waiting for that. I think there's still room for the market to move. Is it the 5 hours window before the FOMC meeting minutes, or is it going to move after the FOMC meeting minutes? I don't know, but I want to keep an eye out on the momentum. Yeah, and that's it. So tonight, do not rush into opening a trade, okay? Because in what, 5 hours time, FOMC meeting minutes is going to come up. Any new hints on how hawkish the FOMC is going to be? You are going to be looking at two things. One, are they going to hike 25 basis point or 50 basis point in their May meeting? Number two, you want to be looking on how they are going to reduce their balance sheet, right? If they're being more aggressive, they want to clear the balance sheet off, let's say by July, by August. That's really aggressive. Keep an eye out for those, okay? Okay. Go ahead. Let me rephrase how long the correction on Nasdaq 100 and USD. We'll take a look at that. No problem. Could you explain more? Is USD gonna get stronger and push dollar yen to the upside? Then what is the correlation with other yen pairs? Doesn't it mean Japanese yen will go weaker? Okay. That's not how it works, right? Technically, yes. I just don't know how strong it is. Okay. It will make, let me just clarify this one, okay? If dollar goes up, if dollar strengthens, Japanese yen is going to get pushed down because you're looking at dollar Japanese yen. That doesn't necessarily mean the euro yen, the sterling yen, the Aussie yen is going to get stronger too. It doesn't necessarily mean that it's going to go up. Why? Because the euro USD, the pound USD, and the Aussie USD is getting pressured by dollar also, right? So it could be that the yen weakens, but the euro, the pound, the Aussie doesn't actually have the strength to push against the yen higher. Does that make sense? Because the pound USD goes down. If it goes down too quickly, it doesn't have enough strength to maintain a position against the yen. Does that make sense? Okay. Tell me if it doesn't make sense, and I'll try to make an example out of it. But like right now, let's take a look at Nasdaq. I think there are a couple of key points in Nasdaq. I'll clear up the chart. Don't worry about it. I know it's a mess, but let's clear it up. You know what? This is too much of a mess. I am actually gonna keep 1.5250. I'm gonna delete this. 14.5. Yes, I'll leave that, and I'll delete this. Okay. So that's the okay, in terms of correction, how far is the correction going to be now? Kiko, Pepe, are you looking at what time frame are you looking at? Hourly, daily, 4 hourly, 50 minutes? I need to know your time frame before I can take a look at how far the correction is going to be. In terms of daily correction, I think we have 1450, 14500 as support. But if it does break below 14,500, then it actually could retrace towards 14,000. Okay. But that's daily. I mean, this is pretty much going to be the limit of things, right? If FOMC gets really aggressive and market is unable to price in that aggressiveness, Nasdaq and US 30 could get pulled by the dollar strength. Excuse me. Okay, so yeah, are we looking at an overbought situation at this point in time? Not necessarily, because this one has transitioned above the Ishimoku cloud. It's actually correcting itself. Now, how far is the correction going to be? I know it's actually not precise at 61.8 or 50% on the Fibs, but I want to look at the whole numbers in terms of Nasdaq, because that's how it works. It just functions around psychological price levels. Right now, we do have 14,500. As in kind of immediate support. If it breaks below 14,500, then we could be looking at a slide of about 500 points to the downside back towards 14,000. This is on the daily time frame. Daily? Okay, good. In terms of daily, that's great. I'm not really looking at anything lower than 14,000 at this point in time, even with the whole FOMC hawkishness, unless the market it's really hasn't really priced in on anything. Now we don't know what is going to be. If the FOMC minutes doesn't suggest anything super hawkish, right? If it states two things, we are likely going to hike interest rate faster if this is what comes out. If we're gonna hike interest rates with a higher basis point, then that's gonna trigger more hawkishness from the FOMC side. That might not be priced into Nasdaq or US 30. But what I'm looking for right now is this: the currency market, because of the whole Ukraine-Russia situation, they might underestimate the FOMC. But the US stock market, they are okay in terms of pricing in the FOMC because they have been pricing it in. And I think it's well priced in the stock market, but it's not well priced in the currency market. Does that make sense? It's two separate markets, yeah? We don't look at the currency market and the stock market as equal. They are separate markets. The currency market is priced in the hawkishness from the FOMC. Sorry, the currency market has not priced in fully on how aggressive FOMC is, partly because we got Bank of England, and then that Bank of England that's still hawkish, RBA that just turned hawkish yesterday, ECB that's still unknown because the inflation is high, they need to announce something. There's a lot of factors affecting the whole currency market. It's not just the FOMC. But the stock market, it's mainly looking at the FOMC and just the FOMC. So stock markets are pretty well priced in terms of how aggressive the FOMC is going to be. So yeah, I'm looking at stronger support at 14,500 right now, 14,000. I'm not really looking at anything lower than 14,000 at this stage. It's too early to tell. But yeah, that's how far you'll go for the Nasdaq. US 30, this is actually pretty clear and pretty consistent. I'm actually going to wipe that off. 34,500 gone. In terms of correction for US 30, we are looking at 34,000. So 14,000 on Nasdaq, 34,000 on US 30. Okay, these are the correctional levels. If it does break below 34,000, then we are looking at further corrections. But until that happens, don't get ahead of yourself because it's just different markets right now. We're not comparing apples to apples. Okay, great, awesome. Which is the best time frame for scalping or day trading? I like the hourly even for day trading, but if you want to go quicker than 15 minutes, you can do that. For me, I actually use 10 minutes on breakouts. When the US open and the UK opens, I trade breakouts on the 10 minutes. Some people might not get access to the 10 minutes, so you can use 15 minutes. If you are planning to hold it, you trade in the morning, you want to let it go at night, then you can look at the hourly time frame. That's still okay. So if you're trading intraday or scalping, you're going to be looking at 5 minutes to 15 minutes, right? You don't want to go higher than 15 minutes. If you are day trading, you want to be looking at 15 minutes and an hourly time frame. Those are good time frames to pay attention to. If you go to the 4-hourly time frame or the daily time frame, then it's actually useless because your trades will be more for swing trades. It will no longer be an intraday trades. So keep that in mind. Okay, makes sense? Cool. Bitcoin daily and then oil. We haven't talked about oil, so we can take a look at oil, and we're looking at time here. So we'll talk coins, Bitcoin, and then we'll take a look at oil. Okay, I'll make it simple. I'll go oil first. I'm actually staying away from oil. I don't think this is the time to go in on oil, and I'll explain why. Take a look at the momentum here. We're actually in a huge pennant, right? It's actually a huge symmetrical triangle. Want to put it any other way, it's actually just within a triangle. Just stay clear of oil until it goes through that triangle. It's still above the Ishimoku cloud, right? So technically we can't go short. I don't want to go short oil, but it's not time to go in long on oil as well. This is on Brent. It's actually going to look the same on the US oil. So the question just now was, Mike was asking about oil, XCI or XBR. It doesn't matter, just pick one, because from a technical standpoint they look very similar. If one breaks out, the other one breaks out as well. It's just that you're looking at different numbers. It's not time to go in on oil. We're actually trapped within a small range. It's going to break out soon. The potential is that it's likely going to break to the upside, but we don't have confirmation yet. If it stays too long like this, then maybe next week, if it breaks below 100 on the XCI, then we could see further push lower. But at this point in time, just stay away from oil. It's not time to jump in for an intraday trade or a swing trade, right? Because intraday trade, you're going to be looking at this, and this is just choppy. It's just a market that moves sideways. You cannot determine if it's actually trending or not. And I'll tell you why, because it's in a big triangle on the daily time frame. It's actually not trending. It is actually very, very choppy. That's why I haven't discussed oil in the outlook this week. I don't think I discussed oil this week in the outlook, but that's the reason why I'm not talking about oil, because inexperienced traders are going to get caught in oil, and it's actually really bad. So right now, and I know oil very well. Some of you followed my trades from last year and probably are laughing right now, but I trade oil more than I trade gold. So for me, oil right now, you want to sidestep, like how I like to trade the yen pairs. It's time for you to sidestep for a little bit. This is not the week for oil. This is not the week for yen crosses. This is the week for dollar and gold. So you might want to focus on those if you want to look at oil. So just be clear, it's actually in a very, very choppy market right now, and you want to be very careful. Okay. Bitcoin, I think we are tracking lower on Bitcoin, right? But let me just clear this off. We got 47,500, 46,500, 45,500. Okay. Whoa. Sorry, let me just clear up a few things. 42,500. No, that's fine. Okay, I'll keep 47,500. I'll keep 46,500, 45, 44. Yeah, okay, makes sense. Okay, so don't get confused, right? Let me just remind you one thing. Cryptocurrencies are not they're actually decentralized, okay? Because they're decentralized, it's got nothing to do with what the central bank is doing, right? Whatever FOMC is saying, whatever if they want to hike interest rate or not, it's actually not going to affect cryptos in the long run. It's just gonna create a little bit of a flux for short-term traders or people that are confused with people that think cryptocurrencies are the same as fiat currencies. They are not. They are just called currencies, but they are actually in a different market. Just like how I explained the FX market and the stock market, they're different. Crypto markets are again different. They're not really affected directly by what the central bank does, okay? Because think about it, right? You bought in, you believe in cryptocurrencies because you think, okay, they are decentralized. You're being a rebel. You don't want to be controlled by the central bank. You don't want to follow their regulations. But then all of a sudden you start thinking, oh, the FOMC is going to do this, so I think this is going to be good for Bitcoin. This is going to be bad for Bitcoin. It technically doesn't make sense. Get it? Because you want to be decentralized, you want to be a rebel, but all of a sudden everyone is following what the FOMC is saying. I think that's what the view is in the market. And I'm an analyst. I write outlooks. I write research papers for a living, and I just find it funny every time I read a report that, oh yeah, FOMC is gonna hike interest rate. All of a sudden, Bitcoin is gonna go down as well. It doesn't click. So it'll function differently. Don't take a look at it from a fundamental perspective, but from a technical perspective, we are looking at a little bit of a pause, maybe about 44,000. We could maintain a level around 44,000. It's not going to exactly bounce us off 44,000. It's actually going to whipsaw to about 43,000. So, but that's from a daily perspective. And if it does maintain that level, then we're good for Bitcoin. It's just not now. It's actually not the time to go big on Bitcoin and hold it for months. It's not time yet, but it will be soon. We are looking at potentially another month before we see that happen. But hey, you're not here for what I'm going to be looking for in 1 month, right? You're here for what's going to happen today. So here's the outlook for Bitcoin today. If you are thinking of going short Bitcoin, think about it. Might be a little bit late, but if you guys are short Bitcoin, then yeah, you can maintain a short position. Just have your stop loss above 45,500, and your target is at about 44,000. Okay, you can do that, or yeah, that's the only thing you can do actually on in terms of intraday scale, because we are below the Ichimoku cloud, way below that. I think we have momentum to potentially test that 44,000 level. So be very careful with Bitcoin. I don't think it's a bullish market yet. In terms of, yeah, does it go down? Is it going down because of FOMC? No, it's not. Okay, it's a different market condition. Just don't think of it like that, because it doesn't really make sense. But I'm just looking at reports coming in. We've got journalists writing about it. It's got something to do with FOMC. It actually doesn't have anything to do with FOMC. As a beginner, how many quotes can one take? In terms of, you mean like how many pairs? I don't want to go any more than 4. If you want to focus on 4. If you're good at 4, then you want to add 5, 6, that's okay. But don't look at too many things in one different time. Like, you don't look at dollar Canadian and then the next day you are looking at euro Canadian. It doesn't work that way. And you want to stay clear from the exotics and the minor crosses or pairs. You want to focus on the major pairs. That would be the euro USD, pound USD, Aussie USD, dollar yen, dollar Swiss, dollar Canadian. That's it. If inflation goes up, bank increasing interest rate, does it mean XAU will go down? Yes, because if interest rate goes up, right, the cost of you, say this is the thing. If you hold a physical gold and you store it in a bank, if interest rate goes up, the cost of you to maintain a gold position goes up as well. So that's what pushes spot gold lower. Okay, so let's wrap it up for tonight. I think it's a great session, and I think I can go slow today. It's actually really good for my larynx as well. If you guys are wondering what's going on with me, why does it seem like it's very hard for me to breathe sometimes? Because my larynx is damaged. So from now on, I'm actually gonna go slower. If I'm going too fast, stop me, because I'm trying to maintain a slower pace in our webinars going forward, so everyone can sit in, listen, and understand. And in my outlooks, I'm trying to go slower, but I just need to fit in so much information in a short time period, and that's why it's actually faster for the outlook. Okay, thank you all. Have a great night. And don't forget, in 5 hours time, you got your FOMC meeting minutes. It will be your afternoon. It will be your midnight. It will be your evening, depending on where you are. But good luck with your trades. And I'll see you on the Outlook on Monday and webinar next Wednesday. Okay, stay safe.